What's going on, you guys? Welcome back to the channel. Economic Prepper here. Hope you guys are doing very well. Uh, I got some news for you guys, and it's not looking good. And I really hate to bring bad news to the channel. I actually prefer to have very positive vibes around me and to share positive vibes. But with bad news, there's always a strategy. So no matter how bad things are getting for you guys, whether you're struggling financially, your local economy is not very strong. Some parts of the country are experiencing empty shelf situations. Extraordinarily high gas prices and rent prices. Home values are going higher and higher, getting more and more difficult to obtain the American dream through home ownership. Rent prices are going up at rates that we've never seen before. The current inflationary environment that we're in, most people have not experienced in their lifetimes, unless they're over the age of, say, 60 years old. So we are in what many would say unprecedented times, certainly in America here. And the trajectory that the economy is on right now could be a parallel to what we've already seen in countries like Venezuela. Now, with all of that being said, though, we need to prepare. The preppers who are looking at what's going on and attempting to connect the dots and saying to themselves, okay, given what's happened, given what we've seen in the past, what's likely to happen in the future, how do we best prepare now so that we and our families and those who we care about are in the best situation possible going forward? If you look at Venezuela for a moment, they've experienced hyperinflation to levels that we have yet to see here in the United States. Thankfully, and hopefully we never see it, but there is a chance that we could actually see that here. So we have to be prepared. And part of that preparation is, it's stocking up, ensuring that, our pantries are full of items, foodstuffs that don't expire for long periods of time. We're prepared in terms of generators, ideally solar power generators, a little bit more quiet than the fuel power generators and so forth. Perhaps having real estate in different parts of the United States for different reasons. Some parts of town may not necessarily be safe to live in, depending upon how the future unfolds for us. One of the things that is a little bit concerning that I wanted to talk to you guys about today is that the Chevron CEO, big oil company, we've seen gas prices as of yesterday. I read an article nationwide. We're at $4.82 a gallon on average nationwide. So that means that there's some parts of the United States where gas prices are significantly higher than that. As a matter of fact, do me a favor, guys, wherever you happen to be, comment your state and how much gas is in your state at the moment. I'd love to know where you guys stand on that right now. And this is a daily evolving story here. It seems like every day or every third day there's a new record being set in terms of the average price of gas. Chevron CEO says that there may never be another oil refinery built here in the United States. This just came out 3 days ago, and that is very alarming. OPEC did come out last week and said that they're going to ramp up production to attempt to offset the cost of oil. But it's not just the oil production that's going to bring down gas prices. It's the refinery's ability to convert this raw oil commodity into a usable form of fuel that vehicles can burn. Whether that's a premium, whether that's unleaded fuel for the average car, or whether that's diesel being the byproduct of the fuel that the average car will burn. It says here that Chevron CEO Mike Wirth says that he does not expect another oil refinery to be built in the United States ever again pointing to decades of federal government policies as the reason why. Now, this is a very big statement here. Number one, if the CEO of Chevron sees that he or does not expect another oil refinery to be built here in the United States ever again, and we already know that the rate of oil refinery is really on a decline, because every time there's a oil refinery catastrophe, like we've seen, I want to say maybe 8 years ago, if memory serves me correct, every time the refineries go down, that means that there's less fuel available. Even if oil is available at reasonable rates, the refineries are going to be the bottleneck. And so if you can't burn oil, you can't put oil in your gas tank. If you have a regular unleaded vehicle, you can't just put oil in your gas tank and burn that. Your engine will seize. So if we can't produce usable fuel, thanks to, you know, fewer and fewer refineries, well, where do you think gas prices are going to go? They're going to continue to go up. And if Chevron CEO Mike Wirth, for example, is saying that he's not expecting another oil refinery to be built in the United States ever again, then that means that the condition, that the state that we are in right now, is not, as they say, transitory. This is more than likely going to be a situation and condition that we're going to have to deal with for the foreseeable future. In addition to that, he said, pointing to decades of federal government policies as the reason why. Well, if you look at the current administration, there is a clear and evident push for clean energy, for renewable energy. And granted, you know, reports have already come out recently that we are to be expecting blackouts going into the summer here. So what that tells me is that we already don't have the appropriate infrastructure as we stand with the current demand to sustain us as it is. Current administration is pushing toward more of a EV, electric vehicle push, more hybrid automotive vehicle production, cleaner emissions, and I think that is a great push for our environment. You know, like there's no question, there's no argument that environmentally our generations would benefit from cleaner air. But the problem is that the infrastructure is not here yet to support that. And the push is definitely going toward more green. Now, with that being said, this is a money game. Corporations are looking to increase their profits. They're not trying to just, you know, help you out. They're not trying to help me out. Big corporations, you know, these big companies listed on the stock market, their goal is to boost the earnings of for their shareholders. They have a fiduciary responsibility to make the shareholders happy through increasing their profits, decreasing their losses, making investments into future developments that would make the company more profitable going forward. So when CEOs of big oil companies like Mike Wirth from Chevron says that he doesn't expect another oil refinery to be built in the United States ever again, the writing's on the wall, you guys. Lower gas prices, I don't expect to see lower gas prices anytime soon. Now, I'll give you an example before I end this video of how we could possibly see lower gas prices. But right now, it is clear and evident that investments into oil refineries, investments into gas producing operations is certainly going to be on the decline. Now, the reason why is because, number one, the federal government policies are pushing this. They're pushing this upon us. So it's kind of like, you know, what they're doing with clean energy. It's caught, you know, and I get it long term, but in the short term, we're feeling the pain to the extent that, you know, we haven't seen before. It's not just affecting inflation. Excuse me. It's not just affecting gas prices as we fill our gas tanks up at the gas pump. This is added on to the inflation we're already seeing in the grocery stores, right? Because groceries are delivered by diesel burning trucks. So as gas prices continue to go higher, as inflation continues to go higher, these higher gas prices add on to the cost of delivering the products that we buy each and every single day. If you're buying clothes, if you're buying food and baby formula, whatever you're buying at the stores, it was delivered in some way by a semi truck of some form, some diesel burning truck. So as those prices continue to go higher, we will continue to pay more, higher and higher prices at wherever you're spending money. Now, so ultimately the federal government's policies are driving up our expenses. Even though they're attempting to attack inflation, working with the Fed through raising interest rates, it's continuously bringing our costs even higher. Now, if you look at it, where's the money going? Because again, these corporations, they're all about profits. They're not about trying to help us out, you know? They're about helping themselves, right? So as long as we understand what their objectives are, we can better prepare ourselves and prepare our families so that we can hopefully survive this and ideally thrive this evolution of like this new world order that we're headed into, right? So the federal government policies are pushing for clean energy. So they're literally telling us, like, look, the problems that you guys are seeing right now with higher and higher gas prices, these are here to stay. They're not building new refineries to help offset the cost of gas, to help offset, to help improve the refinery rate so that, you know, there can be a greater abundance of gas and ultimately, you know, drive up the supply of fuel and drive down the cost of it. In addition to that, we're not consuming gas at a rate greater than we were prior to the pandemic, but yet gas prices before the pandemic were around about $2 a gallon. Maybe not $2 a gallon. They were barely $3 a gallon. So we're back to a point where, you know, with stores and operations opening back up, we're pretty much at the point of fuel consumption where we were before the pandemic started, but yet we're 40% more expensive to fill the vehicles up at the pump, right? So what this tells us is that there's a clear and evident long-term problem that we're going to be dealing with. And with the push for green energy, they're not looking to fix this thing. Now, maybe 10 years down the line, as more and more EV vehicles are hitting the roads, as more and more hybrid vehicles are being purchased, perhaps we can see the demand for fuel go down because there's more electric vehicles on the road, there's more hybrid vehicles on the road, and then there's fewer and fewer gas burning cars on the road. Then we could see, through the evolution of reduced gas burning vehicles on the road, it reduces the consumption rate of gas, and then that gas price goes down. But this is so long term, so this is scary. Now, the article goes on to say here that there hasn't been a refinery built here in our country since the 1970s. This is what Wirth said at the Bernstein's Strategic Decisions Conference this week when asked about the prospect of new capacity being added to the Gulf of Mexico. And, you know, I'm pretty sure a lot of you guys remember this big, massive catastrophe at the oil refinery that just completely ruined the Gulf of Mexico, killed, you know, thousands, probably millions of marine life out. You know, it was just an awful environmental catastrophe, drove up gas prices, oil prices. It was a huge mess, right? So, and they spent likely billions of dollars attempting to just clean that up. They're not looking to put more money back into this thing. Again, corporate profits is the number one focus, and especially when the federal government is not subsidizing these, the federal government is not providing funds to get corporations to rebuild refineries. They have shifted focus. They're all EV right now, and so that's the direction that we're headed. He says, quote, "I personally don't believe that there will be a new petroleum refinery ever built in this country again." He goes on to say capacity is added by debottlenecking existing units by investing in existing refineries. So, okay, at best we're going to see investments into the existing refineries, but don't expect any new ones, is what he's saying. Quote, and that makes sense because, again, they're still making money on existing refineries, right? Chevron and ExxonMobil, these billion-dollar companies making, by the way, record profits, right? They're making record profits because the cost that they're selling their products is higher than ever, right? But at the same time, they're making record profits because they're not reinvesting those profits into new refineries. That would cut into their profits, right? So they're like, hey, we're going to maximize what we've got, but we're not doing anything else. And just think about it. If you own a company that is inevitably on the, I'm not going to say they're on the verge of extinction, but they're the length of time where they can continue to even sell their product, it's got a limited shelf life. It's got a limited amount of sustainability, right? If the amount of vehicles being produced that use your product are being produced in a smaller and smaller quantity, then that means that the product that you sell, refined fuel, is going to be in lesser and lesser demand. So if I'm a CEO, if you're a CEO, you're going to say to yourself, hey, the writing's on the wall. There's only so much more of this stuff I'm going to be able to sell. I need to sell it for more because I know at some point I'm not going to be able to sell hardly any of it, right? And so that's what these companies are doing. They're realizing that the market's not growing, so they're not investing more money into these new refineries. They're just not going to do it. So it says here, but what we've seen over the last 2 years are shutdowns. We've seen refineries closing. We've seen units come down. We've seen refineries being repurposed to become biorefineries. And we live in a world where the stated policy of the United States government is to reduce demand for products that refiners produce. So they're literally telling us that the US government policy stated that the government is to reduce the demand for products that refiners produce. They're literally trying to put these refiners out of business. But in this process, it is continuously raising our costs to buy these products. And it's a very strategic move. As quiet as it's kept, this is a very strategic move to put these companies out of business. And I don't think that they necessarily want to put these companies out of business, but they're trying to promote clean energy. So how do you promote clean energy? Well, you drive up the price of the competitor. And by driving up the price of the competitor, you're incentivizing people to go out and buy these electric vehicles. So we're going to see higher and higher prices for fuel, higher and higher prices for diesel to come. So I just wanted to share this information with you guys. Drop me some comments down below. Let me know what you guys are thinking. Does this make sense to you guys? Am I making sense? This is a very interesting topic and it is ever evolving. So I'll continue to bring you guys updates and strategies on how we can cope with this. Drop me some comments down below. Do we have anybody in our comments, do I have any viewers who are actually preparing? Are you storing fuel at the current prices so that you can kind of stave off the ever increasing prices at the pumps? What are you guys doing to cope with these rising prices for gas? Are you buying electric vehicles? Drop me some comments down below. Share this video if you got value out of it. Also drop me a like if you've made it this far, and also subscribe to the channel. I look forward to seeing you guys or hearing from you guys, and I'll see you guys on the next video. Take care.